And joining me now is Ozan Ozkural, who is the CEO of Tanto Capital Partners, and Yazgan, who is a professor of economics at Istanbul Bilgi University. Gentlemen, welcome to Straight Talk. It's good to have you here. So 2018 was a volatile year for Turkish economy, especially when Turkish lira surpassed the rate of 7 against the US dollar after a diplomatic spat with the United States. But now things seem to have settled to a great extent, with international organizations updating their forecasts on Turkish economy and saying they're quite optimistic about 2020. So Ozan, are you optimistic, and what is expected of 2020?
Well, thank you. I'm actually cautiously optimistic. And the expectations stem from two things. A, the way that Turkey and Turkish economy itself is trying to restructure itself around the difficulties that we've had, but also we don't live in a bubble. Therefore, we are part of the global economic and geopolitical landscape. And as long as the low yield environment in the world continues, and to that end, there is still $11 trillion parked in negative yielding assets in the world, investors will chase yield, will chase returns, and therefore emerging markets overall will be still in 2020 the darling of markets, if you will. Now, where Turkey stands within that is going to be interesting, because although money will flow to emerging markets, investors will be much more selective in terms of what risks they take. So perception becomes reality. So I think it's a great opportunity for Turkey, provided that we can manage perception.
Ege, give us an overall view of 2019 Turkish economic developments. Besides the repercussions of that currency shock, Turkey has faced difficulties. Tell us about the measures taken so far.
Well, actually, Turkish economy, the recession of the Turkish economy has already been over now. And we expect another strong positive growth in the fourth quarter of basically due to the base effect of the last year. So, however, the question is whether the growth will continue and the recovery of the recession after the recession will be quick, as in the past experiences, like in the 2009 crisis. Turkey entered a deeper recession, and compared to this one, the recent one, was the much deeper in terms of the output cost. But however, the recovery came very quickly, and then the Turkish economy started to grow again.
But to sustain that, do we need structural reforms?
Well, yes. The question is that that growth period, after the 2009 crisis, was basically driven the huge credit growth.
Yes.
So now the Turkey needs to, well, it's very unlikely this time to continue the same path by relying on the credit growth. So then, Turkey needs some sort of structural and other reforms to repeat the same path again.
Now the government is focusing to boost economic growth and creating new jobs. And then comes the direct foreign investment, which is very crucial for the Turkish economy. Ozan, tell us about the current situation and opportunities Turkey offers.
Look, that's a great and very important point, in that Turkey is now a top 20 world economy. So therefore, the kind of FDI, foreign direct investment, that Turkey needs to attract is not really hot money inflows, right? We're talking about what I always call a sticky long-term FDI, whether it's within real sectors or even if it's portfolio management. Investors, or we want to attract investors that think long-term. Now, what does that mean? We have to do some structural reforms. We have to underline the relative stability of dollar Turkish lira, because ultimately, any investor globally that places money into any country, they tend to think in dollarized terms, right? So there's an element of FX risk that we have to manage, the perception of, and also create the right legislative landscape to allow investors to choose Turkey over different countries.
All right.
Now, what does that mean, just very quickly? And don't want to kind of cannibalize it, but the thing like the new, for example, Turkish-made car that is going to be revealed, it may sound local, but it allows investors to participate in Turkey in benefiting from technology transfer and know-how of what will dominate the global future growth of economy, which is, for example, battery technology, electric cars, so on and so forth. So as long as Turkey can continue to be at the forefront or a part of a club that is playing the long game, I think that will be a good point for investors to take a bet on Turkey.
Okay. So in the latest move to push U.S. President Donald Trump to take harder stance against Ankara, U.S. Senate committee backed the legislation to sanction Turkey for its purchase of Russian S-400s as well as its northern Syria operation, Peace Spring operation. So tell us about how prepared Turkey is this time and how this will be different than the previous ones again.
Well, Turkish economy seems to be very sensitive of such kind of news, and especially the financial markets. Then, when such a news comes from U.S., then we see some sort of volatility in the financial markets. However, when you look at the situation, this is all up to the. I don't want to summarize all thing, but it seems in the final end, it's going to come to President Trump, and Trump will pick up 5 of the probably the lightest ones, the lightest one, and then if the most economically damaging ones are not selected by President Trump, the effect on except the high volatility, but we will experience in some situations, in such situations, we certainly experience some sort of volatility in financial markets. However, the net effect after the first round will not be so important in my guess. That's because if given the assumption that they are...
This will jeopardize the 10 billion targeted trade volume between Turkey and the United States?
I think it can do, depending on where they sanction. So if they limit the sanction to the defense sector, it's more kind of protected, right? If it does come to the financial sector, that will certainly impact it, although I don't think it's in the interest of the United States to sanction Turkey vis-a-vis the economic environment. But the point is, I think they have to, because if they don't, then they set in their mind, in the Senate, in the US, they set a very dangerous precedent from their perspective for other countries to go, for example, prefer S-400s versus Patriots or so on and so forth. It's much more local, political driven inside the US rather than anything else.
Just to punish Trump. Yeah. So Turkey, on the other hand, in an effort to diversify its economy, became an important part of the Belt and Road project. The first freight train arrived from China to Ankara on November the 6th, and Turkey renewed its Asia Anew initiatives. So tell me, Ege, are Turkey's interests lie now in the East rather than the West?
Well, yeah, Turkey's interests are lying in exporting and restructuring its production overall. That means we cannot. Given what I said earlier, this is a Turkish economic growth model should be changed to resume growth again and to make it sustainable for the future. So that means Turkey should rely on external demand rather than internal demand, as in the previous period. So that is, of course, for Asia is a big opportunity for Turkish economy as well, for restructuring it to make it more export-oriented.
Last comment from you.
I think Turkey, given our position, should look at all sides. We don't have to pick East or West, right? And it's entirely within our national interests to trade and have trading relationships with everyone in the world. So I don't think it's going to be an either-or, but we have to place...
That's why we're talking about diversification.
Exactly, right? Why not diversify?
Reduce the risk.
All right. I'm afraid we're out of time, gentlemen. Thank you very much for joining me on Straight
Pleasure.
Talk. Appreciate it a lot.